good. Vincent here. Today I'm with Mandy Zammit from M2 Accounting here in Brisbane. Yeah, great to catch up with you again.
It is very good to see you again.
Yeah, look, I really appreciate your time because here it is, tax time. I know it's mad.
Pretty flat out, yes.
So, yeah, I just really wanted to catch up with you briefly today to talk about, for property investors, what they need to bring in for their tax returns.
Yeah. If you have a rental property, you need to bring in basically anything to do with the property that you've had in the last 12 months. So all your agent statements, if it's rented through an agent, if you rent it privately, just all your bank statements that the rent gets put into, so we can add up all the rent for the year. And all your expenses, whether it be your council rates, water rates, insurance, any repairs and maintenance you've done, bank fees on the bank account that the rent gets put into. You can also, if there's any travel expenses, if you've gone to inspect the property, we can claim that as well. And any new assets you might have purchased, if you bought a new hot water system or something, we need details of that and the invoices. What else do we need?
So there's in any repairs you were saying, there's also a difference between repairs and capital improvement, isn't
Yes, there is, yeah. Basically, any small items that you fix, like if you have to fix a leaky tap or something like that, that's all, or even painting the property, that's deductible, so that's fine. However, if you buy a new item like a new hot water system or a new air conditioner, that is generally a capital item, so we have to depreciate it. Any improvements to the place, like if...
So if they renovated a bathroom, for instance?
Yeah, we have to capitalise that, so you can't get an outright deduction.
So if
there's a new vanity or something like that you're putting in, it gets depreciated.
So if it was leaking and it was a repair, is there a sort of...
If it was leaking, if you had a shower cubicle that was leaking and it had to basically be gutted and then fixed, if it was fixed exactly the same as it was before, so you didn't make any differences to it, that's repairs, which is fantastic.
Okay.
But if you improved it, like upgraded all the fixtures and fittings and remodelled it and rearranged it, that's depreciated. So
okay. Yeah.
Also, any assets under $300 you have an immediate deduction for. Between $300 and $1,000 it goes into a low value pool which has a higher depreciation rate of 37.5%, and over that it just has the ATO depreciation rate.
And that's all a tax deduction off their income?
Comes off the income for the property.
Okay.
Another very big thing for rental properties, which is why we say if you're looking for a rental property, go for a newer property, you get a building depreciation as well.
Mm-hmm.
So you can get a quantity surveyor out and they give you a written schedule of what you can claim every year against the building depreciation, which is basically free money for someone.
Oh wow! So they're a great idea.
That is, yeah. It can be worth up to like $5,000 or $7,000 a year in tax deductions.
Wow!
So it gives you a bigger refund and
you really only need to get the quantity surveyor in once.
Once, that's right. Once for the property, yeah.
Yeah. So as you say, it's probably $500-600 investment to get the quantity surveyor.
That's correct, yeah. And
one time around, and then you
it's definitely worth it. That's right. Even for an older property that's been recently renovated, you can get a quantity surveyor in, and they can give you a depreciation on it as well.
Okay. Oh, that's great. Right. And I suppose, is there any other thing that you think that they need to bring in relation to?
No, we've pretty much covered everything. Basically, if anything to do with the property, if they bring it in, is fantastic. If it's a new rental property, it's the first year they've had it, we also like to ask for the settlement sheet for when they purchased it, because we claim council rates and water rates off that as well, because there's always a settlement adjustment on there.
Okay.
And plus, if it's a new property, we like to start a file up for capital gains in the future. So we've got all the original purchase details.
So if it's a unit or there's strata levies and all
strata
sorts of
levies,
things,
claim those as well. Yeah.
Okay.
And if you have to pay a share of the if there's a common area and there's electricity, copies of that, and there's maintenance on that. Yeah.
Okay.
So basically anything they think, even if you think it's relevant to the property, bring it in and we can work on it.
Oh, terrific. Look, I appreciate your time. It's
all right.
It's invaluable information. If anyone's in a situation where you need some help in relation to accounting or just advice around this, some of the deductions that are available that you may be curious about in relation to your property, please feel free to get in touch with Mandy. And it's just a matter of having a chat over the phone.
That's right.
You normally offer a little bit of initial consultation sort of thing.
If someone's got any questions, they can come in and have a quick chat to start with. It's always recommended to see if you like your accountant. So you got to be comfortable with them if you're going to deal with them for years. So
yeah, well, we've been really happy with you guys. So
well, that's good.
Yeah. hence why we're here today.
That's right.
All right, well, thanks again for
Great, Brett.
joining me. All right,
It was good to see you again.
Yeah, we'll catch up with you next time.
Okay, we will.
Okay,
See you
we'll see you in the
later.
next show.